Welspun India is in focus after an operationally weak set of earnings in the September quarter. We're joined by Altaf Jiwani, CFO of Welspun India, to help us decode the quarter gone by. Well, the stock's been trading in the positive. Hi Altaf, good afternoon. Thanks a lot for joining us. Just looking at your numbers, top lines seen a degrowth of almost 10%, and the margins have also seen a decline. Could you take us through the highlights of the quarter gone by?
Thank you for having me here. We have seen 1,630 crore is the top line, which is and EBITDA of 306 crores, which is 18.8% EBITDA margin, and we have seen a profit after tax of 100 crores. Return on equity is about 18.1%. So during Q2, actually, we have seen a kind of US, which is the largest market, single largest market in the world, and obviously the largest geography for us as well. So during the Q2, actually the total offtake by the US retailers has come down by about 12% compared to Q1 last year. So obviously that volume has impacted, and India is the largest player in this segment with 40% market share. So that has obviously affected all the Indian players. So that has the volume drop which has happened. In our case, we also had this base effect because of the last year's issue. So both these couple of issues which has actually brought down the revenue for us at 10.6%. But we have seen actually our initiative of investing into brands for the last 2-3 years. So in fact, in the last quarter, the new campaign which we launched in India for Spaces, where we say that yahan takiye kam aur sir zyada, has actually achieved a lot of, it was well received, and we have seen about 47% growth in the Spaces branded sale here in India. Similarly, in Christie, we have been investing for last 1.5 years. So Christie was one of our crown jewels which was waiting to be polished. So we have seen about 15% quarterly growth. Now this is substantial when we compare to the actual pie size growth in that market, developed market. And also we have seen Christie now, which was predominantly a UK based brand. We started exporting Christie. Today we have about 24 stores in China. So in China we have seen a substantial traction there on Christie, because there's a flair for luxurious high English brand, English legacy brands over there. So that has helped us create this kind of traction in the branded revenue. Also we have seen during last quarter this new technical textile business which we started. So it's a matter of great pride for the country that our product for supplying fabric to aerospace industry has been approved by the aerospace testing laboratories. So now we can approach the customers in both US as well as Europe. So Airbus, Boeing and ISRO and NASA, where we can start supplying once the products are approved, we can start supplying. So we have also started now broad basing our industry base from the consumer side, that is automobile. So our technical textile products have been approved for air filters by the automobile industry. It has been approved by aerospace, as I mentioned. It has been also recently the railways in Rajdhani, the napkins and pillows which were there, those were supplied by Welspun. So we are seeing a kind of things, all the initiatives which we had started taking efforts during last 3 years, that is innovation, branding and sustainability, have now started showing results which will, and obviously the other segment which is like sports vertical. So earlier we were supplying towels to Wimbledon. Now we have started for FIFA 18, we have got the contract for them. So this is the first time FIFA is actually going to have towels in the FIFA 18 tournament. We have last year we supplied T20. We also had this
we
Escort.
Still have a degrowth of 10% in your revenue. So what is the kind of outlook for the second half of the year?
Right. Yeah, so it looks like this is a transient situation. So hopefully this destocking tendency should move out. So we should be able to, and obviously we had this base effect. So we should see a kind of a repeat in terms of volume during H2.
You mean volumes will remain flat? They will not degrow at least.
Yeah. And no, annual we are looking at, see, there's one more factor we must keep in mind is that the export incentives, which was drawback, which was 7.5% and ROSL, which was 3.9%, those have been reduced substantially during from 1st October. So there is obviously 5.5% reduction on the drawback and about 1.4% reduction on the ROSL. So at least to that extent, you can see the kind of impact which will be there in the top line.
All right, Altaf, we'll leave it at that. No, thanks a lot for joining us and decoding the quarter gone by for us. That was the management of Welspun India. The stock's doing pretty well, though there was a muted growth in terms of top line and even operationally, but the company has managed to post a good jump in terms of profit. But mind you, there was an exceptional item in the corresponding quarter. That's how it's showing a net loss for the corresponding quarter.